I'm now joined in the studio by Adrian Schmidt. He's a head of research at C-View. Adrian, thank you so much for coming in the studio. Now, first of all, I just wanted to touch upon what Elliot was just saying. We're hearing a lot about organizations such as the British Chamber of Commerce saying, guys, if you're overzealous about the budget, this is going to hurt us more and we may risk a second recession.
Yes, that's correct. I mean, certainly most people, I think, would agree that it would be wrong to try and cut the budget deficit too quickly. I think even in the US, we saw Geithner say last week that we won't expect any sort of cuts really till 2011. And I think probably much the same is true here.
The prospects for the pound, we're expecting the Bank of England rate decision this Thursday. What is it going to look like?
Sterling is already quite weak. I mean, certainly levels above 90 in euro sterling are historically very low for the pound. Having said that, the chances of rates going up in the UK before anywhere else in Europe seem quite low. We have a bigger budget deficit, bigger household debt problems and so forth. So for that reason, I think there's still some scope for sterling to weaken, and perhaps if we see the US recovery kick off a bit before the European recovery, sterling could even become the funding currency of choice rather than the dollar. So there is some scope for sterling to weaken a little bit further, I think.
Last week, Adrian, we were hearing from the ECB President Jean-Claude Trichet that he's starting to withdraw some of the extra liquidity he's put out there on the markets. Are we going to have a similar stance from the Bank of England on Thursday, or is it just too soon?
I think it's too soon for the bank. They've already indicated that they're going to keep their QE until February, and I think rates are going to stay unchanged. So I think it'll be quite a quiet bank meeting. I don't think they have any real decisions to make. I think there's some optimism there. We're seeing probably some signs of growth in Q4, but that doesn't necessarily mean that they're going to be happy to take away the QE very quickly. So at this point, though, they're on hold and waiting to see what happens.
Now, the big eco data, of course, last week was that US jobs report. How is that going to impact US dollar? A little bit of strengthening there over the next couple of weeks?
Well, the time frame's more difficult. I think certainly initially we saw some strength in the dollar, and that's slightly unusual in as much as equity strength has typically led to dollar weakness. But this time it was different. And these correlations do break down if you start to see movements in interest rates. And I think that was the main thing, that US interest rates, US yields went up in response to that report. I'm not sure they're going to go up much further very quickly. Certainly there's some scepticism about whether that report's going to be sustained. We're going to see similar sort of gains in the near term. But I think it is a warning sign that maybe the dollar has gone nearly far enough anyway. And people, as I say, will start perhaps looking for different funding currencies. Sterling's one possibility, the yen and the Swiss franc are others. So I think there's some scope for the dollar to recover against those lower yielding currencies.
You actually like emerging markets currencies, two in particular, Turkish lira and the Polish zloty.
Well, yes, emerging markets, I think, still certainly have more potential to gain than the majors. And we like those essentially because there's less central bank opposition to gains in those currencies. Those and Mexican peso is another one, where the central banks aren't trying to stop it going up. I think a lot of the Asian currencies, there's a lot of reluctance to allow those to rise, where zloty, lira and mex, we've seen a lot of weakness, and there actually will be a fair amount of acceptance and happiness at some sort of recovery.
Adrian, thank you so much for that. Adrian Schmidt there from C-View. Well.